Good day. Ira Epstein with your agriculture wrap-up for this Wednesday, the 3rd of October, 2019, about 3:35 in the afternoon. Well, as you can see, the grain market's pretty stable. I think that's the right word to use today. Corn up a penny, wheat basically unchanged, whereas the soybeans were down 2 on the day. If you take a look at energy, sort of just drifting here, as the markets, I think, are waiting in part on a couple of events. Number one, October 10th, we have the Chinese coming to meet in Washington, D.C. with U.S. trade delegation. In the corn market, I was waiting yesterday for the biofuels announcement from the president. We might get it tonight as he's, I think, on his way to Florida at some type of fundraiser or speech giving that he's doing, and we'll see what goes on. Speaking of that, again, he asked China for help today. I don't know what he's trying to do with Congress, but boy, you talk about being contentious and rough. It's out of control. When you take a look at the energy sector, well, you're getting a bounce in the natural gas, so overdue after 12 days in a row down. You're getting a bounce in the gasoline, but still pressure on the Brent and the crude. And I like to see the Brent gaining on the crude a little bit, the WTI. I think that's important given still the problems you have out in the Middle East. Now, when we look at a weekly area chart of closes on bean, this is pretty. I hope it can stay like that for the end of the week. We're up 28 3/4 cents. The market has certainly gone up, but it hasn't gone anywhere in the past few days. This was made early in the week, and you see that. You got your move up by Tuesday. The Wednesday and Thursday sort of drifted around right here. And I think when you look at where the Bollinger Band top is, you understand the stall where it came in. Doesn't mean you can't get a piece of information and move through it, but you're getting your stall. In terms of a price pattern, you have a lower low and a higher high. Now, to take that out, all you need to do is not take out today's low and have an inside day or a higher day tomorrow, and you will have higher lows and higher highs. Take out today's low, now that doesn't occur. Where have you stalled? I want you to look at the 200-day moving average of closes. You've stalled against that number. Remember what we were talking about 2 days ago. This was on Tuesday when the market, we had the 18-day under the 100. This called a bearish crossover where the 18 got over the 100, and you can see it's extending itself. Prices stalled. Where's the Bollinger Band top? Came in right at the peak of the market where I thought the traders were going to back off. Is that a reason to be short? No. If you're a farmer, it might be a hedge opportunity. I mean, you still got to bring in your crop, right? And the question is 920 a good number if you're a farmer? You have to make that up because you got to look at basis levels. What's your elevator paying? If you move it around, what's your freight? What's your other charges? There's plenty to go on there. In terms of momentum, well, the momentum is starting to fade a little. Now, let's see how many days we have. The red and the blue are both over 80. It takes 3 days of them over consecutively, over 80, to be embedded. So you have it today, you had it yesterday, you did not have it the day before. Therefore, we have a market that is overbought. If the red line starts putting down, momentum will turn, and it could spell trouble as the market, if it gets through that, and you saw this on this other chart here, that 100-day and stays there, that puts this potential back in play, the 100 and the 18. If you get up and going, the problem is if you're over the upper Bollinger Band, the odds of staying over it are only 5% of the time. So that's a bit problematic for traders. In the meal market, you ran into your trouble at the combination of the Bollinger Band and the 100-day average, and you've backed off since then. Momentum is not even trying to embed. It's just got itself overbought, and now what it's done is it's correcting that. As long as the numbers are back under, both of them, under 70, it's no longer overbought. If I come back here, yesterday one of the numbers was over 70. So you're correcting that. Support back here at the 18-day average. Resistance, the combination of the Bollinger Band, 100-day average. You don't play to get to the 100-day often. You're playing the Bollinger Band more than anything. Then the oil. This is a sign that beans aren't good. I know you're going to say, Ira, what are you talking about? This market took off. Rarely do you get a big bean move with oil leading the parade. So As this comes up, yeah, I'm looking for the potential. Can it get up to the upper Bollinger Band? You've got momentum up, trend up. You broke through this 29.31 area and you began your run. I wouldn't be surprised if you get there. Support's all the way back at 29.36. But I think this is the wrong part of the soy crush spread to carry the whole market. In the corn market, when we got up to this Bollinger Band, I know that I said, if you're a farmer, are you looking at this? As a speculator, you're still bullish. And the reason you're bullish is you still have the pattern with today's action of higher lows, higher highs, but more important, you've had, see these numbers? They've been going sideways over this 80 level. Until they drift with the red line back under 80, the bulls have control. The resistance isn't far away. It's 8.92, about 4 cents. And if you did explode in prices, which means you'd have to stay over that upper Bollinger Band, 409 could be a number the market makes a run at. In the wheat market, not liking what I'm seeing. Let me explain it. Momentum is down. Prices are fighting at the 18-day average, and with today's inside day, should you take out 405 and a quarter, you will reverse the pattern if you do that to the potential of lower highs, lower lows. Then a close under that 18-day average. Did I say 405? It's 485 and a quarter. If you close under that number, you have lower highs, lower lows, bias down and momentum down. So I think the bulls have their handful right here. If they can rally the market, we always show both sides. What if you get up to the upper Bollinger Band? First resistance point in an uptrend, because you have that in place right now. Secondary 502. You're at a very important point in the market. Sugar, not surprised at all that the market's backing off a bit. You got, for the first time, to the combination of the Bollinger Band 100-day average, pretty stiff resistance. Is that a reason to be bearish? No, there's no reason to be bearish. I think the bulls had all the reason to take money off the table. Very big difference. Now, what about slow stochastics? Well, you see both numbers are over 80 today. They're over 80 yesterday, over 80 the day before. So today, they embedded. It takes 3 days to do that. If the red line turns under the 80 level and closes there, then I will turn around and say to you, I think momentum has left the upside, and you could put price and that line in the sand, that 18-day average, back into play. Here's a market that surprised me today. I thought yesterday this market was not going to take out 99.30. Momentum was flat. Fighting a battle. You went home with the market just slightly under that 18-day average. You had a pattern of higher lows, and then when it opened today, it went down, took out 99.30, did a whole reversal, and then came back up, and it's challenging what I thought where it was going to go, the 100-day average. Snooker time. In the cocoa, this is interesting as can be. Here is a market that lost its embedded reading. Not here, both numbers over 80, right here. When can you gain it back? Only the day after you lose it. It didn't gain it back. I'm actually looking for price to drift down to the 18-day average of closes. Would you be bearish? No, you've still got your upside bias. You're over the 18-day average and the trend is up. It surprised me that it's higher. I think the market innately is getting weaker. That's the story I think it's starting to say. We'll see if I'm right or wrong on that. In the cotton market, up and away you go. And first challenge of the Bollinger Band. What's the game plan? I think the pros take money off the table. Remember, I don't tell you in these tapes what to do. I'm telling you what I think the pros are doing. Do I qualify as a pro? I've been doing this since 1969, so I don't know how long you have to be one to become a pro, and I don't even know what a pro means. But I think that the money was coming out of the table right there. Momentum is trying to turn up. Support back at the 18-day average. You don't want to see the 60-20 area taken out. That would break the pattern, but you did hit an upside target. In the cattle market, as long as you have an embedded reading, what are you? Bullish. And the market fell back to the 100-day average and trying to move back up. What about feeders? We thought yesterday maybe it's starting to lose that momentum. I mean, it's looked that way. Nah. Kept it, still has the embedded reading. Now you've got to really focus on this support because breaks could be well contained there. If the market decides to run to the upside, where might it go? Why not that upper Bollinger Band? And in the hog market, well, it's a difficult one to call here. I think the trade is getting themselves what I'll call evened up going into the trade talks between China and the U.S. that kick off on the 10th. Now, the Chinese delegation will get here right after the 7th or so of October, as they generally come in a little early, get everything set. And these are supposed to be, I don't know if that's going to happen, supposed to be senior level people. If they all are, that's a good sign. There was more purchases today, by the way, of soybeans. So it looks like the Chinese are going to use those license amounts up, those tariff-free licenses that they issued about a week ago, and have beans bought. But I read today, they haven't bought hogs. So we're waiting to see what they're going to do with the meat sector of that. A lot of what I talk about is taught in our futures trading kit. Now, let me just tell you what it does. It gives you chart patterns in it. You're going to be able to work with it with the different charting software. We have two versions that we include with it. One of the versions is Java-based, the other is window-based. You're going to have access to our mobile application. If you'd like, you can. If you haven't tried my research, you can try it, and it comes as a trial, but only once. I want to make that very clear, and we keep pretty good records. We work with this with you, and you're going to get what I call the cause and effect sheet. If you go back in time, Paul Volcker, under him, that became very famous, M1, M2, M3s, when you were looking at the velocity, the amount of money moving through an economy. It sounds way more complicated than it is. We explain how it works when you see money supply up or down. We don't look at that as much any longer as we do whether the Fed in this environment is cutting rates or holding them steady or even raising them like they did in December. So if you'd like to get this all explained in a way you might understand it, it's not hard. Go to our website, get the futures kit. There's other offers there if you'd like to take advantage. It's under the free offer spot. You can click up here to get there as well. If you see this icon, just click it. It'll take you to our free area. Again, if you want to do it the old-fashioned way, call us. You'll have everything as you're on the phone. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.